Mr. Mitra is married to one wife, and he has been blessed with a son and a daughter. The wife is a lawyer. Ladies and gentlemen, in the morning we had a lawyer. I was seated here and I was amazed. Sincerely. Let's put our hands together to welcome Mr. Mitra Debesh. Thank you so much. Come, we welcome you so that you can take us through the presentation.
Thank you. Thank you, Jeffrey, for your kind words. Ladies and gentlemen, a very, very good afternoon to all of you. Greetings from India and greetings from the Institute of Chartered Accountants of India. A great pleasure on my part to come and share my views and share what is the Institute of Chartered Accountants of India with an erudite audience as yours. I was sitting in the morning, and you see, I saw the enlightening and the passionate speech that was given on women empowerment in the morning. And you see, once I heard that, I was also, recalling the kind of issues that we have on the similar topics back in India. I'm thankful to ISPAC for having invited me to come and speak here. First of all, I think I have been speaking to so many here since I came, most friendly professionals here, and some of the issues is I was trying to say, what is Institute of Chartered Accountants of India? And they were astounded with the figures that I was giving to them. So I thought that first of all, I must share with you what is the Institute of Chartered Accountants of India. We do two things. We are regulating the accounting profession and also the accounting education. Both the areas the Institute of Chartered Accountants of India is involved in. And we pride ourselves in saying that we are the partners in nation building. Skill capital of India. Now, you see, those of us who have some idea of India, India is having one of the highest GDP growth in the world. And the government relies heavily on the Institute of Chartered Accountants of India for advice. Please note, and here you see, maybe you will be a bit surprised, it was set up, Institute of Chartered Accountants of India was set up in 1949, even before India became a republic. India gained its independence in 1947, became a republic in 1950. Institute of Chartered Accountants of India was set up in 1949, and even before India became a republic, set up under an act of parliament. Now, we are the second largest accounting body in the world. Our membership strength is about 2,265,000. That is 2,65,000 presently. We have, you see, the head office is in the capital of India, Delhi. We have 5 regional council offices. We have 160 branches. Number of council members are 40. So somebody was asking me that when 40 people are there sitting in a council, how big the council room is. And I was telling you, see, huge. And then when the debate takes place, you see, and many of the decisions have to be taken by majority. All of us, those of us who are in favor of motion, we raise our hands and we said, all right. You see, on this, maybe, and all the decisions are taken by a majority. So as I was saying, you see, we are a huge monolith organization, second largest accounting body in the world. That's what you are. Now, in India, the entire accounting profession is, but the auditing profession to a great extent has the impact or has the influence of the Companies Act in India. If you are running a company, then you have to be regulated by the Companies Act in India. And the institute works very closely with the government of India, especially with the Ministry of Corporate Affairs, to see how the profession, lives up to the expectation of the government. For example, I don't know what is the situation here. Every company in India, and this is something you would like to see me, note. Every company in India needs to get its account audited by a chartered accountant. That is a mandate given by law. Every company in India has to do that, right? You can be a chartered accountant in profession, is this a proprietorship, or you can be in partnership. But every company in India needs to get its account audited. So that is how the great responsibility that is there for the profession in India. As you said, it acts as a partner in nation building on, for example, the budget. When the government of India gives a budget, the pre-budget memorandum goes from the Institute of Chartered Accountants of India. That immediately after the passing of the budget, before the budget is approved by the Parliament, the post-budget memorandum goes from the Institute of Chartered Accountants of India. Government does take note of the views of the Institute of Chartered Accountants of India on various issues pertaining to the fiscal laws, the economic environment in the country. Now, just now I was talking to some of my friends here. You see what we do to regulate the profession of accountancy. Today I was just asking, somebody was telling me that ISPAC might be having a membership strength of over 22,000. So I was asking him, out of this 22,000, how many would be practicing professionals? And he was telling me that maybe about 3,000, 2,500 to 3,000 are practicing professionals. I was asking him that out of these practicing professionals, how many would be sole proprietorship professionals? And he was telling me that quite a lot of them, quite a many of them. In India also, the chartered accountants who are passing out now, about 85% of them goes into service. 85% are now into service. And only 15%, I'm talking about the present scenario, only 15% comes back to the profession. We are a bit this thing because you see the profession now has become, it's not hunky-dory. You see, you have to take challenges in the profession. And the problem with the profession is this, that the Companies Act now has imposed huge penal consequences if an auditor deceives a stakeholder when he is making a report. So that is, you see, because of the penal consequences, many of the younger members, they feel a bit apprehensive about coming to the profession. But not only this, in the service and with India being a growing country, the opportunities that you get by being in service is much more than the profession, because in the profession first 3 to 4 years you really have to struggle. He was telling me that about many of you are in the sole proprietorship, that you run a profession as a sole proprietor. In India, about 70% of the firms are sole proprietorship firms. We are very concerned because, you see, what the government of India is saying, that look, you must ask all this to get together, form big partnership firms. Now, many of these firms, ladies and gentlemen, they are not willing to join hands with others. They are saying, we are happy being sole proprietors. So, in India, what we are now doing is, and maybe here also you may think, we are developing this networking guidelines. That is, I have a firm in Mumbai in India, those of us, firm A. Firm B is based in Delhi. Firm C is based in Chennai. So A, B and C, they form a network. They are not partners. They are part of a network. And this network, for bigger work, they quote by showing the strength that they have because of the network that is there. So that is one area in India where we are encouraging the networking area. Today, we have a lot of women professionals in India, a lot of lady professionals, and we encourage them. I was listening about, to the lady madam from Uganda, and she was speaking with so much of passion in the morning. You know, we had a similar situation when the Companies Act 2013 came into being. The feeling was this, that 1/3 of the board of directors of all companies, that 1/3 of the positions in the board of directors should be reserved for women. That was the feeling at that time. And when the Companies Act was being developed, you see, there was strong feeling that why don't you reserve that 1/3 of the board positions for women? The other lady, I'm sorry, I forget the names, she was saying that can we have a look at the quota system now? And there was this feeling that can we have a quota in the board? And it's to keep 1/3. Even the parliament, Indian parliament today, they are talking about how about reserving 1/3 of the parliamentary seats for ladies, women. But as long as Companies Act came into being, the government was on the verge of agreeing to this proposition. You know, from where the opposition came? The opposition came from the women. They said that we would like to be in the boardroom not because of our gender, We would like to be in the boardroom because of our merit and competence. We do not want a quota. That was the feeling that was there, and Government of India was taken very aback with that argument. They said that, you see, gender is not a very this thing. We should like to be in the boardroom because of our merit and competence. And what happened later on, Government of India backtracked on that. And today, the board of big public interest entities, big companies, they are required to appoint at least one woman director in the board. Big public interest entities, they are required to appoint one woman director in the board. The feeling was that why do you want to have women directors? Just for the sake of having women? Then somebody gave a statistics that in the Scandinavian countries, most of the board, majority of the board are populated by women. We have majority board positions by women, and these are the countries which has a lower rate of corruption. So the feeling, and India is, you see, we are trying to battle. Somebody was saying in the morning about corruption. We are trying to battle corruption in India. And those feeling is, you populate more with the boardrooms with ladies, the corruption level will come down. But now we are having a situation, as I said, that only, see, for public interest entities, one board position is reserved for women. And we have some of the top class. You see, if you would have been in India, if you would have been a professional, a CPA, you would be in huge demand in India for the board position. That's it. You see, that's how it is. They're all looking for good women professionals to take up board positions in India. So that's how it is. Accounting standards. Today when I came in, I was saying that, you see, you had got a brochure, and after at the end of the brochure, they were talking about IFRS 15, the revenue that has come out, the revenue standard that has come out. They're talking about IFRS 15 that they were writing there. Today, in the Institute of Chartered Accountants, the challenge that we face is, converging with IFRS. I don't know how many of you have faced the challenge. I was asking my friends in the morning today, what happened? Did you adopt IFRS or did you converge with IFRS? In Kenya, I was asking. And they said, no. We have adopted IFRS. We have not converged with IFRS. But in India, what has happened, we have not adopted IFRS. We have converged with IFRS. Now, you may ask me, and this I will take in greater detail when I take up other issues. You may ask me, what does adoption and convergence, how does it make a change? You see, in the convergence scenario, first of all, we have renamed IFRS. In India, if you go and talk IFRS, they will say, it's not IFRS, it is Ind AS. That is Indian accounting standard. They have renamed IFRS as Ind AS. So in India, they will say IFRS is Ind AS. So Indian accounting standards. Now, how is Ind AS 100% similar to the IFRS to which all the professionals in Kenya are conversant with? They are about 95% similar. But there are carve-outs. And the carve-outs have been taken keeping in mind the changes that is taking place in Indian environment. For example, IFRS 1 talks about a situation, you have the situation of current and non-current. I'm going a bit technical, but it's also a technical conference. So you have the situation of current and non-current. Loans, they can be current if they are to be repayable within 12 months from the reporting date. The situation in IFRS was, if some loan conditions, covenants are not fulfilled on 31st of March, immediately the whole term loan becomes current. And you have to create a current liability for that whole term loan in your balance sheet. You have not fulfilled the condition that was written in the sanction letter. That does not mean that the loan becomes a current liability and not a non-current liability. So we are saying, you treat it as a current liability once there is a call letter. So those are the kind of carve-outs that we have in India, in India's vis-a-vis IFRS. For example, in IFRS you are talking about statement of financial position. That is what you are interested. See, that's how it is. But in India we still call them balance sheets. Because in India the population is very conversant with the term balance sheet. You say statement of financial position, they will get confused. What is this statement of financial position? So we said, can you have a situation will not change? Like PL. You see, you'd say statement of comprehensive income. right? We still call it statement of profit and loss. Because in India, everybody is so conversant with profit and loss account, now it is profit and loss statement, so everybody is conversant with those terms. That's why we have said we have not adopted IFRS, we have converged. You see, we have kept in mind the local requirements and tweaked the IFRS a bit to suit the local requirements. You see, you can say the International Accounting Standards Board would always want you to have 100% adoption. But then we have been battling that, look, this 5% or 7% changes have to be made, keeping in mind the conditions that are there in India. So that's a change that you see we have in India. I'll talk about IFRS in greater detail as I go ahead with the presentation. Standard auditing procedures. Today, I was seeing, you see in India, we had different numbers earlier. To understand what you feel right, I must, you see, as soon as you speak about a number of auditing standard, I must be, and 705, the same debate took place on May 23rd. I was flying from Bombay to here, and on that day, the Auditing and Assurance Standards Board had met. And they were debating as to whether SA, which is ISS 701 here, from which date it has to be made mandatory. They were debating this. So look how much we have become. You will understand me. In the post-lunch, usually they always give me post-lunch session. Now I'm becoming a bit more ambitious and adventurous in my presentation. SS 706, forget about the screen, whatever they are saying. Right, this Institute of Chartered Accountants of India, they have given me this presentation. They said, no, you don't move out from the presentation. You stick to it because it's the prestige of the institute. I said, all right, I've said it, but I will speak. Suppose SA 706, 705, and 706 is emphasis of matter, which is there in your booklet only. Anybody who can tell me how is emphasis of matter different from a qualification? Or you see, if anybody can tell me, I'll be very happy. It's back, they've been saying about this. Anybody who can tell me, I'll be very, very happy. Usually I target the younger members. So if you have passed out in the last 2 or 3 years, maybe you can tell me how is ISS 706 different from ISS 705. In India, let me tell you, even people are still grappling with these auditing standards. If I tell them ISS 706, they will still not understand. But what has happened in India is, and I don't know whether it's happened here, the government of India, because of a change in the Companies Act, has made all this compulsory. They are now saying that you have to follow, every auditor has to follow this. That's how tough. We have been always arguing that disciplinary mechanism is there on the Institute of Chartered Accountants of India. They said that the government of India says, thank you very much, it's very good, we know, but we would like to see here the voice of the corporate India, voice of the stakeholders, voice of the general population. If you're a CPA, you always will face a perception issue. We always say we are an honest profession, but then you have a perception issue. Are we actually honest? Are we actually going the right way? That is also the perception issue that we face in India. The profession faces in India. And we are trying to battle that perception issue. Saying, showcasing whatever we have done. We are always showcasing to the government of India. For example, I'm a member of the Board of Discipline of the Institute of Chartered Accountants of India. On May 30th, we have got about 6 or 7 cases lined up. We say where you have to take action against the members because of professional misconduct. And the government is telling us, showcase, take action, and let us know what action you have taken. Be quick and fast with that. And we shall be very happy with the institute. That's how it is. So, but coming back to my original question, emphasis of matter, please note, emphasis of matter basically is this, that you are bringing to the attention of the reader, debtors have not confirmed their balance as on the date of the balance sheet. For example, you have this note in your notes on accounts. You don't want to qualify on that. At the same time, you want to bring that note to the attention of the reader of your auditor's report. You bring it as part of emphasis of matter. You are not qualifying, because in emphasis of matter, those of us who have used it, you know, you write at the end, our report is not qualified in respect of this matter. That is the last time we want to be safe. We go by the emphasis of matter route. That is, you bring it, but don't qualify. and leave it to the judgment of the leader of our auditor's report, saying that, look, I have brought it to the notice of the stakeholders, but I have not qualified. And you cannot really point fingers. At the institute, we are saying that, look, if you are clear in your mind that you need to qualify, please go ahead and qualify. Do not go for this ISA 706 and say, it's a challenge we always face here at the Institute of Chartered Accountants of India, telling the members that you have to do this. Ordinary assurance standards, ethical practices. Every time. Right, now what has happened is this time, and let me tell you, in the budget, we have a system of tax audit, so much of legal protection given to the profession. If your turnover is more than 1 crore of rupees, and 1 rupee is approximately equivalent, what they're saying, and you might not have this in Kenya, this is called tax audit, section 44 AB of the Income Tax Act 1961. Now what they're saying is, the income tax officer or the assessing officer, he doesn't have so much of time. Your case is put under scrutiny, he will refer to your tax audit report, see what is the situation, he will rely on this, and if you say that everything is fine, it's a questionnaire, then he will not go much into the whole thing. He will accept your tax audit report. He will accept the report of the chartered accountant giving the tax audit. Great faith on the accounting profession. At the institute, what we did, we found that there were people who are issuing, chartered accountants, who are issuing about 200 reports, one of them. We said, how can you issue 200 reports and have quality? We said, you cannot have quality. So what we have done is this, we have said that at the council, that if you issue more than 45 reports, you will be held guilty of professional misconduct. Because we have said, you see, some of you are smiling, you see, we have said, if you go for too much of quantity, the quality gets affected. So we have said, can we lay down that a limit of 45, that one person says can sign only 45. Now many of the members have gone to the court against this guideline of the institute. They are saying institute has no business laying down limits. They say, if I am good enough to sign 200 audit reports, why should institute put a upper limit on this? But the institute is sticking to its point. Now what has happened in this budget? You cannot control every professional. The government of India is now saying, I'm talking about ethical standards. The government of India is now saying in this budget that if a chartered accountant provides, or CPA for that matter here, incorrect information in his tax audit report, then he will be penalized to the extent of 10,000 rupees for incorrect information. This is in addition to the Companies Act penalty. 10,000 rupees penalty. Don't worry. The greatest challenge before us, sir. And now what has happened, we have an ethical standards board. I'm sure the similar situation is here. We have an ethical standards board here. Now see the international standards of ethics we are now adopting. We are telling all our members that, you see, unless you are ethical, nobody can save you. And I'm sure that will be also a message that your institute passes here. That the cornerstone, the most important area is now to be ethical in practice. Very difficult when you are giving a true and fair view in the balance sheet. Somebody was telling me, Debashish, you talk about ethics, you are giving true and fair. You are not giving true and correct. I have a lot of estimates and judgments to be made. And when I make estimates and judgments, I can go here, I can go there, I might be wrong. We have taken this view that error of judgment is not a professional misconduct. For example, an item could have been capital or could have been revenue. And instead of treating that item as a revenue, you have treated that item as capital. There would have been a viewpoint that it could have been treated as a revenue, but you have not done it as revenue, you have treated that as capital. You have used a judgment to say that I have treated that as capital instead of treating that as revenue. The issue was, is that professional misconduct? We said that, you see, if you can justify in your report, and if you have made a disclosure as to why you treated that as capital instead of treating that as revenue, you say that these are the judicial pronouncements on which I realized, on which I relied on to go for capital and not to treat that as revenue, then if you have an error of judgment, it is not a professional misconduct. The whole idea is this: how much application of mind you have done when you have done the audit. How much application of mind you have done when you have done the audit. So that is the most important thing. Now, so when I talk about application of mind, sir, this education and examination of chartered accountancy course, what has happened is this: communication skill of a chartered accountant. We have been told that. Now what we have done now is this: we have made a course compulsory before you become a member of the institute, which is called the General Management and Communication Skills. You have to go through a 15 days course on general management and communication skills before you are given a membership of the institute. I know in 15 days I cannot teach communication skills to anybody, but at least the rudiments of the communication skills I'm teaching them. Because what has happened, we have campus interviews. I don't know whether you have campus interviews, whether the institute here does it, but we do campus interviews in India, and all the top corporates, they participate in the campus interviews. Now when they are interviewing our candidates or chartered accountants, you see, they are saying that two things happens, Debashish, and they tell us: one, communication skills maybe has to be better. Number two, the general knowledge, general awareness has to be better. They know debit credit, depreciation, accounting and everything, they know debit credit. But whatever they said, I asked a gentleman, what is the GDP growth rate in India? Or I asked another gentleman, what is the repo rate fixed by the Reserve Bank of India? Things that are there in the front page of newspapers. And they were saying, your members cannot answer those questions. The general awareness questions your members cannot answer. And they're saying, whenever I ask them to apply their mind to an issue which they have been taught, they are unable to apply their mind in a practical situation. We have noted that. Now in this general management and communication skills course that we have, so the general awareness is very, very important. Before the campus interview takes place, we take a 2-day awareness program for all the chartered accountants. We say that, look, have you read the financial newspaper yesterday? What was it? Because they are, to our mind, the ambassadors of the Institute of Chartered Accountants of India. That's what they are. Now we have changed our course curriculum. What has happened is this: I would like to be educated by the institute here. By the way, we are having a MOU with the Institute of Certified Professionals of Kenya. The Institute of Chartered Accountants of India is having an MOU with them. You see, our president came here in the month of January. MOU has been to share technical knowledge, to share personals. On the 19th of May, the Council of the Institute of Chartered Accountants of India has approved that MOU. It has now gone to the Government of India for final approval. And once that MOU comes through, you will find that many of people like us are here, and many of you, people like you, are there in India. So that's how it is. So you see, the MOU is now in the final stage. The Institute Council has approved that MOU. But coming back to this thing, we have been told that, look sir, your examination is very tough. We said that the pass percentage in final is below 10%. It's about 7-8%, hovering around that. It's below 10%. The people have told us, sir, my child, he's taking up the course, and our entrance examination is a MCQ based question where you have the objective type. And many students, they pass that, and the pass percentage in the entrance examination, which is called CPT, will be about 47%, 40-45%. They pass the entrance, get stuck in the later part. The feeling was that, sir, can we have a situation where the entrance is difficult, the exit is easy? That is, the entrance examination that we have will be very tough, and because of the difficulty in the entrance, you will have only the best of people passing that entrance, and once they come into the course, there is a 90% chance that he will become a chartered accountant, and he will have no uncertainty about the future of his career. The institute accepted this point of view. Now the entrance examination is now being rechristened as foundation. Earlier it was 200 MCQ papers. Now it has become 400. 200 MCQ, 200 subjective papers. We are now trying to see that in the entrance itself, the students or the candidates who might not be the right people for this course, we will not allow them to go further, because we do not want to play with their career. So many parents have come back and said that, sir, you are playing with the career of our children. They have passed the entrance, but they cannot pass the intermediate or final because it's so tough. And they have spent 3 years, because we have this articleship system, they have spent 3 years of their life in articleship, and now they don't know where to go. So now we have changed this, and now you'll find the government of India only 3 days back has approved our new system of education, where the system is tough entry, easy exit. That's how we are thinking. Tough entry, easy exit. That is, once you are passed, the chances are that you're so good, the chances are that you'll become a chartered accountant. That's how it is. We are thinking about that. Now the thing was, we have been told application of mind. That many of your students who become chartered accountants, they study, they memorize, they write, and after that, when they are asked to apply that knowledge in their day-to-day practical situation. For example, I have been told here that you have huge number of members who are also in the industry. The industry says that, what will be the accounting treatment for this in this practical situation? The acquisition is this, that you see, maybe the industry, we are not living up to the expectations. So what we are now doing, in the final we have introduced the elective paper. The elective paper is totally based on case studies. All totally based on multiple subject case studies. We will have in one case study, we will have an auditing scenario, accounting scenario. We'll have all kinds of scenario there. And it will be totally based on case studies. We will even provide the books. You have the book, this is case study, you answer. And that's what we are now, the new syllabus, and the government of India is very happy with us. They are saying that is the way to go. That's the way to go. Right? So now we are having this from this year onwards, or from next year, in the finals, you will have to have case studies. See the case studies, sit down. We are saying, you see, I will give you the book also, no problem whatsoever. Apply your mind, reply to these situations. That's a change that is taking place. The winds of change. And many of us who are in the institute, we are having this change. Trying to see that this change takes place during our council tenure. Right, so that's the next one. CP, continuing professional education. One by one, sir. You may please react when you ask me questions. I don't know what's the situation here. So many people have told us, sir, that once a chartered accountant passes off, after that he never updates himself. You all are here, I'm sure, to update yourself. Of course, the other, if you see, you have a good dinner or lunch, and you have a good function in the evening tomorrow, that's separate, incidental. But the whole idea is, am I updating myself enough? And the feeling was, your members, once they pass off the block of 3 years, he has to go 90 hours. Only then we say your certificate of practice will be renewed. We want to have a situation where you are updating yourself at all times. So that's the continuing CP. Again, an area in which we are the leaders. See, again, an area in which we are the leaders. Post-qualification courses, IFRS. I was talking about India's IFRS. They said that, sir, chartered accountants, the industry does not recognize the fact that as a chartered accountant, or when I passed out, for example, I passed out chartered accountancy about 25 years back. At that time, there was no IFRS. Now, if I go and tell the industry that, look, I can do your IFRS conversion, the industry will tell me that, look, Devashish Mitra, you never studied IFRS. When you passed out, what IFRS conversion you will do? Why we should give you the work of IFRS conversion? Or why we should rely on you or have faith in you on the IFRS? What knowledge you have got? So here at the institute now, we are having these certificate courses. The certificate courses are, you have to attend classes for about 12 days, and then you appear for an exam. And then after you finish, and the exam is tough. This is post-qualification, after you become a chartered accountant. So you see, once you pass that, it is not that you become an expert. But the idea is that you have a general knowledge and awareness which you did not have earlier on IFRS. Similar is the situation on forensic audit. We are telling our members that move away from the usual areas. Audit, the financial audit will not be there for a long time. Okay, right? Government of India is already telling us what is the value addition in the financial audit that your members are doing. So we are saying, can you take up a newer area called forensic audit? And some people have said that, why not? Then we said, can you put up a certificate course on forensic audit, post-qualification, to ensure that our members are ready with this new challenge? Our forensic audit course, ladies and gentlemen, doing very, very well. You will not note so many members queuing up for this forensic audit course. We cannot really cater to their needs. And we have 160 branches in India, and these branches also cannot cater to their needs. What you're trying to do is take them to an area which is different from the traditional. Because we feel that traditional areas, there's just that limited opportunity. Take them into other areas. Forensic audit, even in service, great demand. Great demand. Yesterday, when I was flying down from Bombay to Nairobi, I'm a big film buff. So I was seeing that what are the films on offer on the flight. Then suddenly when I was seeing the flight, I found a film, The Accountant. I don't know how many of you have seen it. The Accountant starring Ben Affleck. Ben Affleck, you might have heard his name, those of us who are English film buffs. The Accountant. So as soon as the word accountant came in, I said that I must see this film, whatever happens. Right? I thought that it might be something about debit credit. I thought I'll be I was very tired. I thought that I will go to sleep. Debit credit, Ben Affleck and debit credit. But then I found it was a thriller based on forensic audit. That this gentleman, he was an expert on forensic audit. He went and found out some frauds and how he got himself into trouble consequent to him finding out the fraud. And how he found out the fraud. So 2 hours I was sitting glued to my seat, watching the film Accountant, watching Ben Affleck, this is star as this forensic auditor, and then telling myself that these are the future of the profession. Right? So you see how things have happened, how things have changed. The day we used to call ourselves tax advisors. Tax, they are saying that, look sir, you are a good tax advisor, thank you very much. We are not interested in you filing your income tax returns, sir. Can you provide us advice as to how we can do excellent tax planning, sir? We do not want to avoid tax. We do not want to con the government. But with your knowledge of the Income Tax Act, sir, can you provide us the areas in which you can do tax planning so that we can, pay least amount of tax, sir? 5 minutes? All right, sir. Fine. So the whole area is this, the way it is changing. The time is changing. Right? I'm two other things. I'll just take 5 minutes. I'll not move beyond that. Peer review. I don't know whether you have this. What you have is this. If I'm a chartered accountant, in practice, the institute appoints somebody else, some other chartered accountant, my peer, to go and come to my office. And he will select 2 or 3 audits that I have done. And he will review as to whether I have followed all the technical pronouncements when I have done the audit. He will come and sit in my office. Peer review. I will have to pay him fees for coming and sitting in my office and guiding me. And then he might even give a report against me to the Institute of Chartered Accountants of India, saying that this gentleman, Devashish Mitra, he only lectures, he does not do anything in the office. Peer review. Review by a peer. And I also have to pay his fees. But what has happened because of that? The compliance with the technical pronouncements have gone up. People are aware now that if I don't comply, I'll have a peer review. I have a discipline mechanism coming up, so many areas. Quality through peer reviews, post-qualification courses, disciplinary jurisdiction, so 2 or 3 minutes, I'll just take. We are the disciplinary mechanism in the Institute of Chartered Accountants of India is part of the institute. The acquisition has been two. That how can an elected member decide on the discipline, professional misconduct of another elected member? Today I was seeing with lot of interest, lot of brochures. I think election is coming up here for Central Council. I was seeing lot of brochures. The same thing happens. The acquisition in the government is, you are an elected member. You rely on the votes of somebody else. And if that person commits a professional misconduct, after you have got his vote, are you going to take action against him? Look at the concern of the government. And the government, they said that we are not very sure about this. So today in the disciplinary mechanism, we have 5 members, the disciplinary body. It is still 3 from the council and 2 from government. Government is saying that make it otherwise. It should be 3 from government and 2 from the council. And the day is coming when it will become 3 from the government and 2 from the council. Government is saying that, look, we must have a majority when you decide on the disciplinary mechanism. These are the winds of change that is coming. The last point, quality review. The quality review. They are saying that, you see, look, your auditors, they do the audit of various companies. Who reviews the quality of audit? We say that, look, Institute of Chartered Accountants of India does that. Well, we are not interested. The government of India is saying, can we set up a quality review board which will have majority of the members from the government to check the quality of audit that is being done by your members? And that is what has happened. Now the quality review board is in full swing in India. And the quality review board is, majority of the members are nominees of the government. They are not nominees of the Institute of Chartered Accountants of India. Before I end, two things, sir. I was reading the papers about 3 or 4 days back. I think our Prime Minister, Mr. Narendra Modi, was addressing more than 50. That's what he was saying. And that is how it is. Right? Ladies and gentlemen, my topic was seizing opportunities. In India and all over the world, we live in changing times. And we also live in challenging times. But these changing and challenging times are also times of great opportunities. Those of us who can seize these opportunities will certainly succeed. Ladies and gentlemen, thank you very much for the patient hearing. Thank you very much. Sir, would you like to sit me? You'll sit there? Okay. Please.
Ladies and gentlemen, I'm sure Mr. Mistran deserves better club than that. Sini kweli? Yeah, thank you so much, Mr. Mitra, Chartered Accountant. I'm sure the topic was one of the most interesting and captivating. And as he went through, I tried also to contrast with the situation in Kenya. ICAI, the Institute of Chartered Accountants of India, they have 2 key roles. They regulate both the accountancy qualification framework and the accountancy profession. In Kenya, we have 2 separate institutions. CASNEM does the accountancy qualification framework, and ISPAC regulates the professional accountant. That is our situation here. Post CPD or CPE hours, both the institutions are doing. The difference is, if you are a chartered public accountant of Kenya, you do not go for 12 days training and you sit for an examination. In India, each year you need to sit for a 12-day course and then you sit an examination. I think that is something we have learned. We sit in the council, we'll engage our members. The second issue is on budget. We all know that the budgets of governments worldwide, they actually impact on 90% of citizens. And professionals are supposed to input into that budgetary process. I think this is one area I noted. Kenya, we are ahead of India, even though we are a developing nation. The Accountant Act says the institute is the advisor of government on both financial and economic matters, any financial and economic matter. In this regard, the institute, we prepare a memorandum pre-budget submission to Parliament, which is discussed between the Ministry of Finance, the National Treasury, and the institute, and the key policies espoused by the institute are taken on board before the minister takes the budget to Parliament, and therefore it is taken to Parliament as part of government submission. In India, they engage after the government has submitted, where the chances are slightly low, where the government controls majority in the Parliament. I think that is a tick for the Kenyan situation. In India, we've learned they have formed a networking forum where a chartered accountant in Mombasa is a partner in Nairobi for purposes of business. I think here in Kenya we have not reached there. I think that's a plus on the Indian side. On affirmative action, I'm not sure who is ahead of each other. In India, women house. You sit on boards, you sit in the Parliament on the basis of merit and competence. In Kenya, Article 27 of the Constitution says there shall be 30% to represent either gender, whether the position is appointive or elective. And therefore, this is a right given to our women by Constitution. And there is already a bill in Parliament to expound on that, how these women will be found. And this bill requires 2/3 majority votes in our House of Parliament. So there I don't know who is ahead of each other, because ours is a right guaranteed in the Constitution. But it also says, as you get the 30%, you must consider 3 things: regional balance, merit, and disability. So I think there we might either be higher because we are assured by the Constitution that our women must meet on the table. In terms of advocacy, we have said India is post, in Kenya is pre. In terms of sanctions to members, our professional accountants who are in the auditing profession, I think our sanctions are extremely lenient, because the sanction here is 100,000, a maximum of 100,000, which is an equivalent of about how many dollars? $100. When I compare to India, it's equivalent of $15 million. However, there is a contrast, and I was sitting there and I was saying there is an unfairness here. For those auditors in Kenau, they are required, if there is a professional misconduct, they are supposed to go to jail for 5 years. In India is 1 year. That's a serious matter. Any professional misconduct for a public auditor under Kenau is actually 5 years or 10 million in fine or both in jail. So I realize, and you realize, that the standard on the public auditor is fairly higher than the auditor doing the private audit for listed companies. I think there should be no money there. On the practitioners or the service, what you call the service, the accountants who are in the service. On the government side, if you are a professional accountant, either in a state department, constitutional commission, or independent office, I find a very interesting scenario. If you make a mistake on professional misconduct, you are supposed to go to jail for 5 years or 5 million or both. So the bar for the public auditor and the public accountant who is giving a service is the same. So that is the standard here in Kenya, and you can see it's quite high. In India is 1 year, but they don't have a fine or both, if I got it right. So you can see the standards here in Kenya, they are a bit high on the public sector as compared to the private sector. And admission to the institute, here after you get your qualification from the CASNEB, which is the body for the accountancy framework examination, I think you just come straight, so long as you are a person of good conduct, and then we admit you. In India, you need to go for a 12 days training on management and communication before you are given the brand CPA or chartered accountant. To me, I think that is a positive thing. we need to hold our hands over our young professionals so that they also, as they go to their profession, they need to know how to communicate, how to manage affairs, and then the tag. And I thought it was here in Kenya where we are saying some BCom graduates, some arts graduates are coming from universities and they can't do a memo. He's just confirmed to us it is the same in India. So we need this measure where, as we admit the accountants, they are able to meet the world and able to present themselves as a manager. And that is what India realized, and they introduced a 12-day course. I don't know who pays for the course, but because the presenter didn't say, but I think it's a good thing. In terms of CPD hours, I think we are ahead of India. Here in Kenya is 40 CPD hours per annum. India is 30, and therefore we are ahead of you in terms of continuous professional education. In terms of quality review, I'm interested because India has a quality review board. I'm sure in Kenya we attempted that reform, it didn't go far, but the institute does the quality review to all our chartered accountants. So that role is with the institute. So you can see that's a good comparison. And as I was seated there, I was trying to see what are the good things we can take and which ones can we leave. And therefore, the MOU actually is the right candidate. I think you can see we have earned the MOU between Kenya and India. So those few remarks, I think once more, I thank Mr. Mitra and invite comments, compliments, and questions. Of course, we'll appreciate the compliments more. Thank you. Thank you so much. I think we will start this end. We will take 5 questions from this end. Then we'll come to the Mindu, this row and this row, and then we'll go to the lower row. So can we have somebody with a mic? I will be deciding who to talk first. I need to see the hands up. Yeah, I will give you this gentleman first. Who else? On this end? Yes, there is another gentleman there. Yes. Please pick the questions. Yeah.
Okay. Thank you. Thank you very much, CA Dr. Mistra, for that incisive presentation. My name is CPA Francis Langat. I think my observation is that I want to appreciate the Indian interest in terms of looking at the national interest in relation to the IFRSs. But my question and or observation would be, did it affect your standing in terms of the requirements of IFAC when it comes to your obligations for your membership standing? Or the way the local standards in relation to IFRSs, did it affect your standing, your membership standing in IFAC? Secondly, is the issue about in the event of collision between your standards and those ones of IFAC or IFRSs, what takes precedence? Thank you very much.
There is somebody there? Yes?
Hello. Okay, my name is CPA Dondi Daniel. Okay, mine is not a question, but just on a comparison. We have seen so far that in India, in terms of CPDs, you have said there are 30, and in our side it's 40. When I look at it, actually, it's very difficult to say that this side is better and this other side is not better. Reason is, if you look at it on our side, the 40 hours, I believe most of us here are not comfortable with it, because if you look at it, majority of the people cannot afford it. So raising it to that bar does not make it better than the others. But if maybe we can come up with a fee, for example, that a majority can afford, then we'll not only be talking of the number of hours, because it is a training platform, and therefore the issue should not be the number of hours as such, but the number of candidates that we attract to come for the training. In that, I believe we will be making everybody benefit on board. But where it depends on your ability to pay so that you come to the training, it's a bit tricky. That is one observation. On the other side, where the gentleman from India said that in their case under IS number 701, where we talk of emphasis of matter, of course he explained that it's a situation where, in the opinion of the auditor, where he feels that he needs to draw the attention of the members or the readers of the financial statements. I think it is just in order, because you see, you really don't need to qualify a statement, a financial statement, simply because there is an article or maybe there's an item that you feel is not in order. I think bringing it that way, I think, is a better way, such that you only draw to the attention of the members that there is an item that probably you feel is of concern, which they should be aware, but that should not really negate the whole financial statement. Thank you.
Any other person from this end? Yes?
Thank you very much for the presentation. Very well done. The only issue I wanted to perhaps get to understand, most of these MOUs usually favor one side or the other side. Is it possible to know the details or some of the details of the MOU? Otherwise, it may be to their advantage, they'll come here easily, and to our disadvantage, we cannot settle there. The other one is also my comment on the sense that the Institute should seriously look at this training and examinations after qualifications. There are quite a number of benefits, because keeping track of the profession is a good thing. Thank you very much.
Any other person? This end? I can't see somebody from this end. Can we proceed with this window column? Yes. We'll start with the ladies first. Then we'll follow with the CPA. And then yourself. I'm coming there, don't worry. I'm coming there. And you state your name.
Thank you very much. My name is CPA Lea Samoe, and thanks for the presentation, Dr. C.A. Mitra. Actually, your presentation was giving a very good comparative analysis between India and the Kenya professional tech. Okay, my question, I may deviate a little bit to learn more about India, and this is based on taxation. I wish you could comment a little bit on VAT and income tax in India, the rate and the burden to the citizen, and the contribution to the economic growth of India. Thank you.
Yes. CPA, I'm waiting for you.
Mitra, PhD, thanks so much. This was interesting. My name is CPA Raymond Oroli. Now, your talk reminded me when I was passing through Bombay looking for green pastures, and I saw a signboard which carried Indian mission, which says, you live simple or living simple and thinking hard. You have really portrayed that here today when you are discussing about the developments in accounting profession. One interesting area was convergence and adoption. We really feel that Kenyans are living exotic. That is why they cannot think, and in the end they end up adopting. This is what is troubling me. The other one, because in Kenya we are actually adopting everything, and we are saying that you have to take it, otherwise you will be left behind. That is the language we are given. Now, two is that you have said that quality, that there is no practitioner in India who can sign more than 45 reports, because you are interested in quality. In Kenya, we have a problem. In Kenya, the field of accountants practitioner is dominated by Big Five. The Big Five can audit eggs in the kitchen up to maize scandals in public offices. And what emerges from there is a report which doesn't satisfy Kenyans. And then these Big Five, they go scot-free. The institute has not come up with such a regulation so that they can give us individuals space so that they can come in and mutilate this dominance. And they have not been disciplined.
Yeah, thank you, CPA. This gentleman.
Thank you very much. My name is Mucho Jean-Claude Bernal. I'm coming from Rwanda, Institute of Certified Public Accountants of Rwanda, where I serve as an Associate Business Development and Training Officer. So, under my responsibilities also include member services. So when we received the invitation from ISPAC, thank you, Tom, to have tabled this kind of talk. I was very much eager to come to learn from Institute of India, because I've been receiving Indians as well as Kenyans coming to register their accounting firms and looking for membership. So one thing I can thank you so much is about how you record the information of your members. It is very easy for us to check if this particular person is from really in the Institute of Certified of Chartered Accountants of India, as well as Kenya, even if they are practitioners holding the certificate of practice. It is very simple to note that. There is something I've noted that we have as which is common. Rwanda Institute also gives exams and also regulate the profession, which is somewhat different from Kenya, but it's okay. My question now come to you, CA Dr. Dibash Metra, is that what are the controls do you have in place to ensure that to be the sanctions in case of violation? Thank you very much.
Okay, thank you. Yes, madam, and then we proceed the other side. this column and the other side. Let's take the lady first. There's a lady here whose hand is up. And then we go to that gentleman.
Thank you. Thank you, CA Mitra, for that. My question is, how close does the Institute work with the regulators? Because I think some of the challenges we have, we want to institute some rules, but then the regulator face the other way. Then thinking and borrowing from other professional bodies, especially in Kenya, like I know the Institute of Actuaries, once you pass certain exams, you qualify for certain professional allowance in your salary. So I don't know how far we can go. Also in Kenya, and the Institute needs to think about this, maybe introduce special exams, or once you qualify, this is a minimum salary that somebody should earn. Then I'm just thinking about the name. Worldwide, they are chartered accountants. Maybe we also need to say CA Jane as opposed to CPA Jane. We need to be global. Thank you.
Thank you so much, Jane. There is one gentleman whose hand was up.
I'm not going to ask a question, but I would like to ask Dr. Mitra tell us more about this improved networking of practitioners in India. I think in your presentation you mentioned in our country the majority of practitioners are actually I call them sole practitioners. In India, you say 7% of the practitioners are actually
30.
sole. Is it 30?
Yeah.
Yeah. With that comparison, I want to take you back to what you said about networking. It looks like the networking is for sole practitioners when it comes to mega project is working. And I think it is an area where we need to explore in this country so that these sole practitioners can actually work together in a beneficial way to deal with mega projects in this country, including SGR. So maybe tell us more how it works practically. I know in our country when we see projects advertised,
I'm sure ISPAC, and I'm not defending the institute, if you listen carefully, EKAI has 12 days conducting the exam. Then I'll move to the next area. CPA, you asked, can we get a copy of the MOU? I think these are, and Makoa, you can confirm this. I don't think whether we keep the MOUs confidential. These are meant to benefit members, and therefore they are available. So you can study them. Yes, Tom. I think I've just confirmed in principle, whenever we finalize an MOU, like the one we have finalized with SAICA, is available to our members. The one for India is a draft. We are discussing, as you hear, because every state has its own interest. In India, the Institute and the Council of EKAI approve, and it goes to the minister for approval. I would imagine this is something we should be learning from India, that the interests of the citizens of that country must be secured. And therefore, as Council, I can assure you will try to secure the interests of these members, beloved members of the Institute. That question was to us. I think the rest you can answer. They are to you, Dr. Mitra. Thank you so much.
Thank you very much for so many questions. Some of them easy, some of them very tough. Right, and I was having quite a time writing down, but thank you very much for your interest in the presentation. Because it's those of you who have asked questions must have heard me speak and must have noted my thoughts. The first question from that side regarding IFRS. They said that if there is a collusion, because I said that in India we have a converged IFRS system. It is called Ind AS. So the question was, suppose Ind AS collides, or the thoughts in Ind AS, they do not really tally with what is there in IFRS. What happens? And they said, why the Ind AS has come into play. In India, there's two sets of accounting standards. One is the Ind AS for public interest entities, and the other is the accounting standards for small entities who are not public interest entities. They are called accounting standards. Now, the accounting standards are very simple in comparison to Ind AS. Now, what happens if Ind AS really does not follow IFRS? Now, this Ind AS, that is, they are mandated by Government of India. It is not issued by the Institute of Chartered Accountants of India. The Institute of Chartered Accountants of India has developed it and given it to Government of India for prescription. The Government of India has prescribed this. So every company in India has to follow that. And even if there is a collusion with IFRS, if you are an India-based company, then you still have to follow Ind AS. Now the issue has arisen, which I think he was referring to. We have a lot of multinational companies in India who are listed in New York Stock Exchange, London Stock Exchange. Now they have been telling us that, sir, why have a separate set of accounting standards when I have to follow IFRS if I am listed in, say, London Stock Exchange? I have to make a separate set of accounts for India and a separate set of accounts as per IFRS if I am in London, or maybe as per US GAAP if I am in US. But in India they have said that, look, we have not departed too far from IFRS. The departure might be of only about 5%. So you should not really bother. So that is the position, and if somebody wants to have totally IFRS compliance financial statements, because it is a multinational, then it must have a separate set of financial statements prepared which are IFRS compliant. That is the position. So in India, it is mandated by law that you follow Ind AS. That's how it is. So you cannot really veer away from this. In the event of a collision, I repeat, it will be Ind AS which will be prevailing in India and not IFRS. At the same time, I'm saying the difference between the two, that's called carve-outs, are very minimum. It's almost like IFRS in India. That's how it is. Next is CP hours. See, why 40 hours and all this, he said about all this. And then somebody said, why you have this 30 hours? Why you have this? In the initial stages when you introduced this, we said that it is totally self-regulation. You come, enjoy, attend the program, go back. But then we found that unless we fix a minimum number of hours, and unless we tell them that, look, you have to come and attend, if it's made totally voluntary, people, they don't come. Right, so now the feeling in India was this, that we have to make this 30 hours compulsory. And it has paid good dividend. In the sense that people are coming, updating themselves. We are more interested in the seniors coming in. So a person above 60 years who really needs an updation, they have been coming, updating themselves. But at the institute, the biggest challenge is elsewhere. The biggest challenge is to ensure that the quality of these programs are maintained. We get somebody and say that, look, you have to come and attend, sit. But what about the quality of the speakers? What about the quality of the deliberation? That is the big challenge before the Institute of Chartered Accountants of India, that we must maintain the quality of the deliberation. The quality of the faculty has to be high standard. Then only the people will come and not criticize the institute when they leave. Because if the quality of the faculty is very good, top class, they will say it has been worth sitting here for 3 hours and, knowing something which I didn't know earlier. That's the feeling at the institute. Emphasis of matter, and they're saying that, the gentleman here, they're saying that if I want to, you cannot force me to qualify. He's right. Nobody forces you to qualify. And he's saying that why I shouldn't have an emphasis of matter. 100% you should go for the emphasis of matter if you don't want to qualify. But you cannot qualify under the garb of emphasis of matter. That is the point that I was trying to make. If you want to qualify, go ahead and qualify. And at the institute, we have issued a statement on qualification auditors report in which you have said, if you want to qualify, please take the trouble of quantify. If you say this has not been done, your one letter is not enough. Say, because this was not done, the effect in the profit was understated by so much or overstated by so much because of this. So we are suggesting that if you're going to qualify, please quantify. Just mere qualification is not enough. That's the feeling at the institute. The MOUs, he has said the MOUs are in the draft stage. It was approved by the Council of the Institute of Chartered Accountants of India on the 19th of May. It has to be approved by Government of India. We have said this. We have MOUs of a lot of other countries, but we are looking forward to working closely with Kenya. That's the feeling at the institute, and we are looking forward to that. We are looking forward, understanding. It's not a matter of big brother or small brother. It's a matter of being equal and learning from each other. That's how it is. Then next, post-qualification course. He was saying that post-qualification course, what happens? He said these courses that is a post-qualification are done after you have become a chartered accountant. You become a CPA, then you take up these courses to further enhance your skill. Now, if you don't pass in these courses, nothing happens. Your CPA or your chartered accountancy qualification remains intact. It remains, nothing happens to the qualification, except maybe the embarrassment that you face if you have failed in that course, and the embarrassment amongst your peers. That's why you see most people, they quietly go and do the course, thinking that if I fail, I should be really very embarrassed about it. But we are encouraging people, the chartered accountants, to take up the course. What is the, you see, you earn a new skill. So where is the embarrassment? There are people who have passed an information systems audit course, and I take pride in this. And our information systems audit course is very tough. It's, of course, it's MCQ based at the age of 74, 75. Can you believe it? He has studied and passed. And when I speak somewhere, I say that these are the role models. A person at the age of 70 years or 71 years, he would say that, Lord, when am I going up? And he will try to be religious. And this gentleman, he said that, can I acquire a new skill? At the age of 74, he passed our information systems audit course. And I also passed it much earlier, but I know that it was a tough one. So that's how it is. So there is no end to learning. And post-qualification course in India, if you do fail, your chartered accountancy qualification is not affected by that. He was talking about this general communication and general management and communication skills. This is a 15-day course. This happens before, this is a pre-qualification course. We want that before you become a chartered accountant, you attend this course of 15 days. Now, who pays for this post-qualification and pre-qualification? Who pays? In the post-qualification, the members pays. In the pre-qualification, the student pays. But in both the cases, the fees are heavily subsidized by the institute. We provide the infrastructure and the fees are heavily subsidized by the institute. We try to see that the fees never, hit the rooftop. That's what we try to see, that it doesn't happen that way. Right? So, but we are very happy with the post. We are now trying our best to see that our communication skills become better. Because at the end of the day, we have seen, it is your communication skills which carries the day for you. So we are trying our best to see that that is how it is. Regarding income tax, and somebody was asking about GST, I think the lady here. GST is the biggest tax reform in India. It is coming up on 1st of July. GST is the goods and service tax. What is GST? The biggest tax reform. But 160 countries in the world, they have this GST. What used to happen in India was, you used to have this is an indirect tax reform, not a direct tax reform. Direct tax, income tax has been always a great source of revenue for the government of India. But then, in the indirect tax form, we had the service tax. I'm sure you must be having a service tax. We had VAT, we had octroi, we had entry tax, we had luxury tax, we had entertainment tax, we had hundreds of taxes on the indirect tax format. And then the levied by the state could not be set off against the tax which was levied by the center. So now what has happened is all this huge number of taxes that were there, now they are being brought under the one net that is called the goods and service tax. This become only one tax. You are not confused. And the second point, India has done very well with its information technology. The whole administration of this whole system, goods and service tax, will be done through the system, computerized. You have to upload your returns. You have to upload your invoice. If you want to have an input tax credit, the invoice that you have uploaded by the purchaser or seller, it will be tallied with the invoice that has been uploaded to the purchaser by the system. And they will check each other. What will happen in the process is this: it is expected that the tax avoidance will come down to a great extent, and the feeling is this, that the GDP in India will grow by at least 1%, if not more. The whole country is taken up with this GST. On 23rd, I was lecturing somewhere on GST, and there's a full house. So, see, the whole country is taken up. Now you see GST, but it's going to be a dual GST. There will be a central GST, there will be a state GST. Central GST will be basically service tax and excise duty. State GST will be VAT. And then you can have a set-off. Input tax credit can be set off against each other. And the whole system will be transparent and system-based. Manual intervention is going to be very less. For example, in India we had people standing in the toll gates. You're getting goods, he'll stand there. He'll say, you're getting the goods, the truck driver will say, can I have some money? What is this system doing is this: the whole thing being system based, in human intervention is being reduced altogether. Is being made, not reduced altogether, is being made minimum, so that the corruption level comes down drastically. That's what is happening. So the whole of the country is now taken up with GST, goods and service tax. That's how it is. He was talking about simple living and high thinking. I think Mahatma Gandhi, the founder of the nation, I don't know how many of you have seen that film, Gandhi. Richard Attenborough had directed that film. You see, certainly yes. But he was also talking about Big Five. In India also we have this whole thing about Big Four, sir. This thing about Big Four, Deloitte, PwC and things like this. At the institute, what you are saying, sir, I don't know whether he will agree with me on this. We are saying that it's no use criticizing them because of sheer size, they are there. What we should do is this: develop the capacity of our own members. Make them so good and updated that they can take them on. Further, we are saying this networking guidelines is basically for that. That one person in Mombasa and the person is Nairobi and the person somewhere else, they are not partners because they cannot trust each other. They don't want to join hands. I wouldn't say not trusted. They don't want to join hands in formal partnership. We're saying, can you be together in a network? Test each other. And then at the end, if you feel that things are fine, and this networking has ensured that you got better jobs, bigger ones, maybe you would like to think of merging into a partnership. That's how it is. So we are trying our best to do this, giving more teeth to the networking guidelines. The networking guidelines, we already have it. We are making it more forward-looking. I chaired the committee which is developing the networking guidelines. We are feeling that the way to go is to develop a robust networking guidelines. I will send the draft, as and when the guidelines are formulated by the Institute of Chartered Accountants of India, which should happen in the next 2 months, I will send a copy of the guidelines here so that you can also see it and do the needful on this. The next is members' information. I think the gentleman from Rwanda was asking me, and how do I control 45 and what kind of sanctions do I have? In India, what has happened is all the details have to be uploaded. It's system-based. Every member has to upload the fees that is paid. Everything is online. Then, you see, when you this 45 is for tax audit. That is, if you are doing audit of certain specified entities. Now, this tax audit reports also have to be uploaded. Once you upload, you have to mention the name of the firm which is doing this tax audit. So somebody, he can check up from the system and find out that Debashish Mitra had done how many tax audits. Because every time I upload, I have to give my firm registration number. From my firm registration number, they can track that with this firm registration number, how many audit I have done. It's quite easy to track because everything is online. Everything is online. Regulators closely work with an Exchange Board of India. The listed company audit are all regulated by SEBI. So we work very closely with them. If they want to know, can I have the names of chartered accountants who are based in the eastern part of the country, having this kind of turnover, we immediately provide them the list because we have the full database with us. So we work very, very closely. And they are also, of course, concerned very much with the code of conduct, and we try to ensure that the code of conduct, that's the only thing that we say everywhere, that if you are ethical, if you are updated, will survive. If you are not ethical, if you are not updated, will not survive. That's how it is. We always tell them that. Somebody said, why you call yourself chartered accountants and why you don't call yourself CPAs? It is so easy to understand. It's a CPAs all over. It's because of a legacy. You see, India was, under British rule. And till 1947, we were under British rule. You see, this system of chartered accountants of India has been formed by charter. And we have not been so much influenced by AICPA. The CPA is because of American qualification. We have not been so much influenced by AICPA as much as we have been influenced by the English. So that's why we have to see, because we have been formed as a charter, we say that we are chartered accountants. So that's how it is. Networking, I have already said, and as and when it is finalized, the revised one, and that is something that is really attracting our interest, because so many members have been saying, can we network more? And as and when we do it, we'll be sending it across. And I'm sure, see, as time progresses, we'll be in close touch with each other and interact with each other very, very frequently and get the best out of each other. For your questions. Thank you.
Thank you so much, Dr. Mitra. I think I must say I feel privileged to have chaired this session as a council member, because we've learned a lot as an institute. Ladies and gentlemen, we need to thank Mitra. Can we put our hands together to thank him more? Thank you so much. I think on the question of whether the CPD hours in Kenya are expensive, I can confirm to you the 40 CPD hours is a requirement by International Education Standards number 7. You are supposed to have clocked 120 CPD hours within a period of 3 years. And therefore, what we did as a council, we averaged them into 40 hours per year. But the requirement is you must have attained 120 CPD hours. What have we done as a council? We have approved 220 events for our members. Quite a number of them are the branches. 50% of the approved 220 CPD events are held at the branch level to reduce the cost, the operating costs, and also to make it easier for members, because you don't need to travel. So on your side, you don't need to pay for accommodation and traveling. We have also inputted in those 200, I'm sure we have benefited a lot, and for that matter, I want to call CPA Caroline Wambugu to come and give memento to CPA and Dr. Mitra. Welcome, CPA Caroline. Dr. Mitra, we assure you that the President meets our legislative requirements. It's not more than 20,000 shillings. Thank you so much, CPA Wabugu. We really appreciate it. I think members now will invite Tom to come and give us guidance on what is next for the day, so that we can call it a day.
Let's put our hands together once more to appreciate the session chair and the presenter. I think that's a well presented session. And I'd just like to remind you that sometime in the course of last year, we actually decided to take a proactive move more than 600 events, because a big institute which has over 240,000, they call it 240 lakhs members. So that's where we are. So I want to quickly make some announcements. First of all, I'd like to urge you to take care of your personal belongings. We've gotten some reports here and there about people losing maybe notebooks, phones, and so on and so forth. Take care of your personal belongings. This is a big crowd. We don't know who is inside here. And that's, just be careful. Then we have ISPAC Smart Card. Those of you who don't have ISPAC Smart Card, during this event, we were supposed to do everything automated, but we missed our target, but we're still working on it. That Smart Card has something at the back. We call the QR code. You look at something that looks like QR code. That code has all your details as a member. The ISPAC Smart Card is our membership card, but it was provided in conjunction, in partnership with National Bank, to give us the financial aspect of it, because you can use a credit card or a debit card. But as it is, that QR code has all the details that members have, and we are in the process of implementing automated system for access to our events. Kindly, if you don't have the card, pass by our desk right outside there. That is a customer service desk, and pick that card. You can activate it for financial functions, but even if you don't, it's still usable for our events. Ensure you pick your card before you leave, because we are in the process of automating everything we do. We don't want this paperwork and so many queues when it comes to our events. Then I would add that there's the issue of MOU between ISPAC and Institute of Chartered Accountants of India. It's at draft stage. I think it was mentioned, I'm just reminding us. And they have also their own schedule of, how to go about it at the end, who should be involved. On our end also, it goes through committees and the council. Once it's ready, it's going to be out there for you to be able to see how you gain out of this particular MOU. And I think the council is actually given the powers to be able to see what is good for the institute's members and the institute at large and for its future. I'd mentioned that tomorrow our session begins at 9 o'clock. Let's be here in good time so that we can be able to run the sessions as scheduled, and we'll be able to enjoy the day as we have planned. Gala dinner shall be there in the evening tomorrow. So the theme is Afrofusion. And pick your phone. Go and pick the phone. I want to request you to give a very firm handshake to your neighbor, if you have one next to you. Thank him for having taken care of you throughout this session. Tell him something good. Tell him something good. Then remind him that tomorrow we are beginning at 9 o'clock. Thank you very much. Asanteni sana. Have a good evening. Enjoy yourselves. Asante.
Mimi nalo jambo la nisumbua akili. Ulimwengu umepasuka mahali. Mungu alipanga usiku saa ya kulala. Mbona walimwengu mumebadili mipango? Usiku sasa imegeuka mchana, na mchana sasa ni kama